Hey, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at what happened in the market during the last week and what we can learn from it and how we can plan for a better trade for the next day. And this is the analysis for the week that's starting from tomorrow, October 31st, Monday 2022. Let's dive into the charts. The weekly charts, Nifty, BankNifty. Yes, a green small body bullish candle. What is your Nifty left side? And BankNifty, it's a gain, but it's a red candle that is formed. It shows some resistance that has happened. So the thing is, you'll have to see this chart right here. It's a weekly chart with a trend line resistance that is drawn, and that's where you understand it's a very crucial zone. Look at BankNifty also. It's almost hit the top, and then it is rotated back, and it's a situation where we cannot predict. There's no indication of bearishness or bullishness. It just shows that it has hit the resistance, and for the BankNifty, some weakness is shown from the charts, but unless and until there is a confirmation of another red candle that comes in the upcoming week, we cannot say that this is an indication of bearishness. But so definitely a bullish candle, but at a crucial point of breakout. Now let's look at the daily charts. Daily is it was an inside bar consolidation that was happening on the Nifty, and that's continues to be well inside that big bearish candle that happened 2 days back. So you can say that it's neither consolidating nor exploding or expanding, right? So it is kind of consolidation only that is shown in BankNifty, but in the Nifty, but BankNifty is showing bearishness actually in the daily charts, right? It shows that it has failed the consolidation of 3 days and then it is broken down, but managed to climb back and then close it as support level, right? That's what the daily charts are indicating. Nothing very much conclusive, except that there is bearishness, slight bearishness more in the BankNifty, and some consolidation continues for the last 4 days in the Nifty charts. That's what you're seeing basically. Let's analyze further. This is Bollinger Bands. Look at this. This clearly indicates an expansion of the upside. So the price is going to climb, attempting to climb into the bands and then walk on that. So clear bullishness is evident, and it's much above the 20 DMA. Look at BankNifty. Here also you can see the Bollinger Bands have expanded on the upside after a consolidation of several days. Actually few days. Consolidation didn't last too much. Immediately after the contraction happened, it has expanded. So that's bullish biased. And Nifty also, even though from the Bollinger Band point of view, from the expansion and contraction point of view of volatility, and try to judge the price movements from that perspective, we can understand that BankNifty also is expanding on the upside with a bullish bias. This is very much, we have already seen that. Look at the support resistance levels that you have. 17,850 nearby zones will be a first resistance upside, then 17,992 previous swing high, and then 18,000 rounding number, 18,115, above which we can say that this is going to be another rally that's going to sustain for some time. Until then, we never know whether it's going to is going to be another failed attempt or not. We never know that, right? Downside in the Nifty, the supports will be appearing at 17,650 zones, and then 17,450 zones nearby, 17,429 and 17,637. These are the support zones. And then below that, I have a beautiful gap support at 17,350, 17,328 to be precise. That's the support resistance on Nifty. Bank, let's see that. So the upside resistance will be at 41,700 nearby, 41,500 to 41,677 is a resistance zone. Above that you have immediately 41,840 resistance previous one. Then you have all-time high rounding number 42,000 is there. All this is resistance on the upside before we get in clarity on the confirmation breakout. Downside supports at 46,86. That 4,600 is the support previous swing low, and then 4,500 would be another support, and then 4,200 would be another support. That's also a previous swing low as well as a gap. So that's levels to watch out on the BankNifty. Moving on, momentum and trend looks good. Nifty charts are that is what you see on the left side. Bank Nifty is what you see weekly, and daily is what you see. Weekly charts of Nifty shows that it is still not bullish yet. If you consider RSI 60 the range, but it is a rising momentum. But in the low time frames daily, it's already bullish. Nifty has climbed into the bullish zones from the momentum perspective, and Bank Nifty has already climbed into the bullish zones on both time frames. That is weekly and daily. So one thing that we have to note here is the Bank Nifty. Bank Nifty has a positive reverse divergence, which is bullish in nature, which indicates there can be a bounce up on the weekly charts. But on the daily charts, we have a bearish divergence, which indicates that price can fall back to the support zones at least. Right, some fall back into the sideways also is possibility, is what daily is. But you'll have to keep a close watch on that. So high time frames indicate bullishness, low time frames indicate small bearishness. That's what Bank Nifty. So always high time frames are to be considered, when you're studying the charts. And the Nifty is, as I said, it is also our momentum is bullish. But trend, if you see, trend has already crossed over in all time frames. In the sense, the medium and the short term, both time frames. Nifty has a positive trend. It's in DMI positive zones on Nifty on both time frames, weekly and daily on both indices on Nifty and Bank Nifty both. So not all about that. But the thing is, it's weak strength. The strength is very weak. Right? So that's why the market is at resistance. So that's about momentum. Momentum bullish, trend bullish. Right? And keep a note of the divergence. Having divergence in different time frames on the Bank Nifty. So that's something to keep a close watch. Volatility about that VIX. It's really a good cool off below 15.92 is where the India VIX is closed. That's 8% fall. So that's a huge fall from the 21 kind of level. So 20 plus kind of levels, and it has cooled off below 16 after a very long time. So several months probably. And so that's a good thing. But you never know whenever the VIX is falling, that could be an interesting low, and then it could spike up back because it's mean reverting nature. So you have to anticipate that. There is uncertainty still there everywhere, so that is something to be kept in mind. Just have to stay out of the trade and options and instruments like that of high risk, or got short portion sizes when the VIX is rising up because of the huge volatility that may come out. It could be good gamma plays, and you could benefit from that as well, but that's for the experts to play. But overall, for the newbies and the normal traders, it's better to stay out of trade when the VIX is rising above the 20. But that's not the case now. It is cooled off, and it's the right time to play the options trading with options buying, probably when it's trending, and then whenever there's a sideways move that comes in, that's where you have to go the non-directional play. Now options data, moving on to that open interest data and the futures open interest data. Futures showing that it's a short covering, which is bullish in nature for the Nifty, but Bank Nifty is showing long unwinding, which is bearish. People are unwinding the long positions and booking profits, and people will have gone short. That's what Bank Nifty is showing for the Friday's move. Friday candle, we have seen that there's some bearishness, but a lot of things happen after Friday, right? So November, we'll see that in the next slides, right? So November 3rd weekly expiry is what we're talking about. The options data. The put call ratio is bullish on Nifty, but not at all bullish on Bank Nifty as of Friday. Put call ratio is not in favor of Bank Nifty, but Nifty it is in the bullish zones, almost in the bullish zones, you can say, right? So the levels of that, let's see the 70. So it's very interesting and very tight range for the next expiry for November 3rd weekly expiry. 17,700 and 18,200 is the range that is seen there. It's the levels. So the highest put and call rating is seen 17,500, and 17,800 is the second level of highest put and call rating is seen. 0.92 is closer to bullishness. We have seen that for the Nifty, and short covering is also bullish. Why I build up on the futures. So not about that. Bank Nifty levels, look at this, 41,000 is the highest put rating is seen, and then this resistance is seen at 41,500, very tight range. 40,000, 42,000 is second level of highest put and call rating is seen after that. Right? So that's the levels that is derived out of a new week in November. right, and expiry on November 3rd, and we'll have to match this levels with the levels that we already studied, and then take positions accordingly. Looking at the sectors, how the different industrial sectors are performing. IT sector is flat. Metal and auto did well. Right, so 2.3% up and 4% up on the week-to-week basis, and auto is clearly trying to take long positions in that because it's bullish on both time frames, on weekly and daily. So clear bullish in the auto sector. Metal also catching up 2.35%. Daily is still sideways. We'll have to wait some more. Even the weekly also is sideways. So the thing is, first of all, other than the reality, auto and metal, and the IT firm and FMCG are down. Not too much, 1.3%, nearly 1%, 0.7% down in FMCG. So they are all still sideways in the short term. So we'll have to wait for both the time frames to come up. But yeah, so IT had a flat close last week. My momentum also is still in the sideways. So overall, none of them in bearish zones at least. So market is catching up, and the leading sectors right now is metal and auto, and FMCG and others are catching up. Reality also is moving up. So that's our overall picture. So take trades in auto sector with more confidence, and probably cautious positions could be attempted as soon as the short-term momentum at least climbs back to the bullish zones. Right. That's the sectors. That's what I see here. Right. You can see that the IT sector has climbed back the sideways with a bounce up that has happened in the major support zone. So that is the place to watch out for downfall. A lot of resistance for the IT on the upside. You can just clearly marked on there. Metal also has come back with a very good recovery after for in the earlier 2-3 months, and now it's still in sideways in the medium term. But we'll have to see whether the resistance to the upside will be clear or not. Auto, the sector that's performing, has climbed back after a small dip, but there is a bearish divergence that we can see there, which could mean that this may not sustain. So we'll have to be cautious about that. But clear, cup and handle pattern breakout has happened. It has made a dip near to the support zones and neckline zones, and then immediately reversed in the last 2 weeks. So clear bullishness is seen, but you have to be cautious because there is a momentum divergence that is seen on the medium term. So in the medium term, when you're taking positions, you have to be a little cautious and wait for some more to clear out that divergence. Pharma is a breakout, but facing resistance right above, and still in the rising momentum in the sideways, but it is still not in the bullish zone. So FMCG had broken out. Now it has got a bullish divergence, and it has not fulfilled the targets of the bullish divergence, the positive reverse divergence that is there, and seems to have bounced up from the neckline, but there is some resistance up there. So we can say after the auto itself, there is some most bullish in the short term. Reality also is a neckline bounce, but it's consolidating recently, sideways momentum, and yeah, so channel breakout also that has happened. So this neckline downside is what we have to keep a watch on. So that's the different sectors, major sectors. Moving on, the industry heavyweights, the HDFC Bank has been consolidating, and zigzag sideways movements are continuously happening. It still remains in HDFC for some reason. Both of them are just not moving up. Even if it moves up, it gets sold off and then comes back. That's what is happening. HDFC also, you can see that it is moving up, but it just consolidates there, breaks down, then again moves up, then consolidates. So that's what is happening. Momentum is sideways on both. Even the Reliance also sideways momentum, but it has shown a good green week in the last 2 weeks. Right? Nothing great seen there, but look at the IT stocks, the Nifty and the TCS. You can see that it's almost near the channel top both. Now you'll have to see whether it's going to come down to the channel bottom or it's going to break out of that. A lot of resistance, including a gap resistance on the Nifty. So I'll be cautious, but there is a comeback that may be happening. Whether it's a breakout or is it the end of that interim relief rally that has happened or not is what you have to close watch. Axis Bank, that's the stock with multiple positive reverse divergence, which is bullish in nature. It's a close neckline, good gap bounce up last week was not that great, but momentum divergence are there. There is actually right now there is no bullish positive reverse divergence, but instead there is a reverse divergence. There is a bearish divergence that is there, but the momentum is falling down and the price is moving up. So that's nowadays they are cautious on the bullish zones. But if you consider Uh, Overall, apart from the momentum and the price action, if you see, it's most bullish is ICICI Bank. But at the same time, you have to be cautious. Kodak Bank is zigzagging since very long time. That's exactly what it's done again after hitting the resistance zone. And it's a hammer pattern and it's a sideways momentum that you are seeing there in the Kodak Bank. That's a heavyweights. ICICI Bank is still holding on. And the IT stocks are ready to break out or come down the channel. Never know what is it. And other heavyweights, Reliance STFC are just consolidating that sideways moves. That is what has been happening. Moving on the institutional participation, you have the buying that is coming back in the Fyers. There is 4,150 crores of buying that has happened last week, and domestic institutions have sold. They become sold their profit booking. So net longs kind of flat is what has happened. Like, look at this. So it's very positive that the FIS institutional money is coming back after a long time. Right. So that's positive for the market. Now look at this. This is what the dollar lies. The dollar was last week was a pullback of 1.1%, 110.6, but still it's very close to multi-year high levels of dollar. And now the momentum we have bullish divergence, reverse positive divergence, which could mean that the price could again move up is what it is. So got to be cautious about that. But if the momentum falls further down and then gets into sideways, that's the time we can relax. And then we are in trouble when the dollar is rising. USD has also given a small pullback. It has fallen down the trend line, and momentum is it's at its medium term. If you look, it's almost near the support zone of the RSI 60. This also is a dangerous situation. It has breached the support zone, that's fine, but in the momentum, it is going to a support, and then there is a divergence, positive reverse divergence, which could be bullish in nature, and price could again bounce up, is what it indicates. So, US dollar, some pullback has happened. No, that is good, but it reached at a very weak level, and momentum does indicate that the price could again move up. Cautious on that. Another trouble, US market has been very positive in the last 3-4 weeks. It has made a very good bounce up from and retained most of the losses that has happened in the last several weeks, and now come back to the same old channel top and same old resistance in the Dow Jones charts that you see. But the S&P 500 and Nasdaq is not showing that much of intense pullback, but Nasdaq has also made a hammer, but that hammer is not in the top bottom of a trend, so it does not make sense. But bullish presence is evident. There is a resistance on the upside. That is something I have to keep a close watch on. S&P 500 also has got a very good move. So overall, if you see, it is nearly 2.5 to 5.5 kinds of move that has happened last week. Very positive on the US movement that has happened. But you have a Fed rate announcement that is going to come. You have so that you don't know whether this bond is going to sustain Monday morning. So you have to keep a close watch. Is that on these two factors, the dollar index rising and the UP not able to fall down below the 80, and the US markets, if is it able to take out that resistance on the upside. It's two things that you have to keep close watch. Another thing is the crude oil. It had given a big bounce up, but it failed and then hit the resistance, and now it's consolidating and trying to move up again. So it's consolidating for some, gaining some more energy, but there's every chance that it can hit the 105 kind of levels if it moves to the channel top. So keep a close. So as of now, it's fine as long as mid is the level below the 90. Momentum is in the sideways in the medium term. Gold is unable to climb back to the resistance from where it had fallen off, and it's in the bearish momentum. Gold, the medium term we're talking about, right? Not that great if you're using the hedge, is that hedge instrument, right? If you're using that as a hedge instrument, from that being bullish, it's an inflation weapon which is not working nowadays because the dollar also shooting up. So that's it. Yeah, some as far as the bulls are concerned, very positive views where the market, US market rose up, dollar pullback, rupee gained a little bit, crude was kind of consolidating, although moved up, it was very small. So overall, it was a good week. But looking ahead, we are at the same position where we don't know whether we'll be able to use market will be able to take out the resistance and move up. The oil will continue to consolidate that, or is it going to break up to the channel top of 100 plus levels? We don't know. This uncertainty is still there. Just like our Nifty and BankNifty, we don't know whether it's going to break out next week or not. Same uncertainties in the US markets and the commodity, oil, and dollar currency markets. Right. So it's a week of very crucial week is going to come next week. Two stock picks for the next week. One is Bharat Foods. It's automobile equipment. Auto sector is breaking out. So auto manufacturing components and all these ancillary companies are also moving out. Bharat Foods is given a clear breakout from the neckline. It's a company handle breakout. And there is good risk reward up there. Stop losses can be from where it had the previous swing low can be the cost low. It would give good short swing opportunities. Another one is a state bank. Banks are rocking. There is a last week had a pullback. It's it is also having a cup and handle breakout from the neckline with the stop loss on the bottom of the neckline. And it can give good risk reward if there is a breakout that eventually happens next week. Right? Bank also is going to definitely move up, and so it's an opportunity, but put tight stop loss because it's a crucial resistance zone. Bharat Forge long and the State Bank of India also long to the stock picks for the next week. Now the payoff charts for the Nifty calendar spread is what you see here, where we are selling 18,200. That's around 400 points away for the coming weekly expiry. We are selling that at 9.3, and then for the upcoming far week expiry of 10th November, we are selling 18,500. We are buying 18,500 call for that farm, and then we are getting a calendar spread. And although the max profit is less, you can increase the number of lot size, and the probability of profit also looks fine. But the range, look at this. You're getting a beautiful range of 17,600 to 18,250, and even if the market it's going to break out, it may not break out. The hope is that it may not break out beyond the 18,200 levels, where it may face the resistance. Definitely downside, if it falls also, it's not likely to fall that much. So with the bullish bias, market could move up, but every time it moves up because of the Vega effect, we benefit. Max profit is less, but count in 1 or 2 days of trading. I mean, 2% max profit target for that, and then it could give a good trade. So non-directional is not exceptionally favorable when the market is in a breakout. Only when it's confirmation of a sideways price movement that is happening, only then you should have a non-directional trading strategy to be applied. But this is a calendar spread, just like a call spread or that we take on the same month. We are taking a far month, and then we take the benefit of the Vega moves that may come in. Right? So that's a strategy for the next week. Weekly calendar spread Nifty. So now that we have studied all the markets in different parameters, let's conclude and come to something. What happened last week? It is a week where the Nifty ended up with the consolidation, then attempted to break out, hit the resistance, and then stopped because the banks were not that enthusiastic to move up. It has taken a pause. So that's what we have. Bollinger Bands, weekly expansion upside, trend indicators positive, momentum indicators bullish, outside is a mistake. Fyers are buying, mixing the cool off, and bullish buy data is seen, US markets are bouncing up, dollar has given a pullback. Overall, it's all in favor. The bullish market view is moderate bullishness for the next week, but there are two major events. That's one is Fed rate decision that's coming the next Tuesday, Wednesday. RBI policy event is coming tomorrow and day after. So there is uncertainty and market volatility could be expected regardless of the charts. The charts something else. Charts are clearly bullish, but unsure because it's at a very crucial zone. Right? Breakout or not, volatility has to be read along with that, given that we know that there are events. US market has done a beautiful recovery bounce back in the last 2 weeks, but we never know whether it can go down the same way because it's already at the channel top, and then it is a big resistance on the upside. So you never know what happens. Global cues are not that great. The crisis situations, the US inflation, Fed interest, all this recession fears, and all this uncertainty still prevail. Nothing has changed in that regard. Nothing much has changed. So so even though the VIX is cool off, you just have to be careful whether it can go back to a 20 or not. So if it's 20, then get out of the trade. Code also has given some consolidation last few weeks, but it's very likely to go more upside because it's a It has been trading in a parallel channel beautifully. So there is a chartically says it's likely to move up, and it has shown that this week the spike of 3%. Dollars pull back, but again you have the divergences, that is which indicates that it can again move up. So that is trouble. So global cues uncertainties are still there. Be very cautious. It is just that your markets are spiked up. You had a question on indecisive when looking at global cues. So it's very indecisive right now. Although the view that is taken is bullish as for what the charts are saying. Based on the different parameters, you have to be cautiously bullish. I forgot to actually add the cautiousness there because we are at a zone where our charts are neither showing that it's bearish, no, nor showing that it is already broken out. So to keep that in mind while all the uncertainty prevails, right? So downside 16,500, 16,650, 750, that zone is always beautiful support zones. 37,000 is also support on the BankNifty. The upside 18,000 if you have a close above that beautifully, and 42,000 above that in BankNifty we have candle, then there may be confirmation that we are heading up, right? To be precise, 18,115. Above that, we'll have a previous swing high breach, and then again heading up would mean that we are making a breakout. So we'll have to wait until that kind of closure happens on a week-to-week basis, right? So as I always say, never take positions naked. Have hedge positions so that you protect your capital and you are still in the game. Use different various strategies, the options where you lose a little, you know what you lose, hedge it properly. And also protect your investments. Long-term quality investments, if they are, protect them by getting little different strategies like cover call and then cash market puts and all these things, right? And that's it. Manage your risk. This is if it is a breakout or a directional move that is happening, stay out of non-directional strategies for a while. But still, you can use personally. You can use directional positions and make use of the selling or the buy, even though it's not non-directional. You can make use of that and still be in the game. Yeah. So manage your risk. Happy trading, happy learning. If you're not subscribed, please subscribe. We have very few subscriptions and appreciate your help. Please out. Share it to maximum and thanks in advance. Happy trading, happy learning, happy investing. Bye bye.